Think only tech stocks make money? I did the opposite and bought 1,000 shares of the most boring stock on the planet, Coca-Cola. While everyone's chasing Tesla and Apple, I'm over here collecting dividend checks that literally pay my rent. Today I'm breaking down the exact numbers, showing you my boring portfolio that generates $1,900 every single year, and why sometimes the most obvious play is the smartest play. If you've ever wondered whether dividend investing actually works, or if it's just something your grandpa talks about, stick around because these numbers might surprise you. Let me tell you why I chose Coca-Cola over every flashy tech stock out there. This company has been paying dividends for over 60 years straight. That's longer than most people have been alive. We're talking about a brand that sells 1.9 billion servings every single day across more than 200 countries. When the world ends, there will be three things left: cockroaches, Twinkies, and Coca-Cola. The brand power here is absolutely insane. And that translates to consistent cash flow that keeps hitting your bank account like clockwork. While other companies are burning through venture capital and promising profits someday, Coca-Cola is literally printing money from sugar water and has been doing it since before your great-grandparents were born. This is what we call a mature, stable business that doesn't need to reinvent itself every quarter. Here's where it gets interesting: the actual math behind my investment. Coca-Cola currently pays an annual dividend of $204 per share with a yield of approximately 3.07%. With the current stock price around $66 per share, my 1,000 shares cost me roughly $66,000. Now, before you click away thinking that's too much money, hear me out on the math. The company pays dividends quarterly at 51 cents per share, which means every 3 months I get a check for $510. That's $2,040 per year in passive income, just for owning pieces of a company that sells Coca-Cola, Sprite, and Fanta. The beauty of dividend investing is that you get paid whether the stock goes up, down, or sideways. The company has maintained a 5-year dividend growth rate of 4.2%, meaning my income actually increases over time without me doing anything. Now let's compare this boring strategy to what everyone else is doing. While Tesla investors are having panic attacks every time Elon tweets something weird, I'm sleeping soundly knowing my dividend check is coming whether the market crashes or not. Apple pays dividends too, but their yield is much lower at around 0.4%. Netflix pays zero dividends. You only make money if the stock price goes up. Imagine buying Netflix at its peak of $700 and watching it drop to under $200. Coca-Cola investors during the same period? They kept collecting their dividend checks like nothing happened. The stock might fluctuate, but that quarterly payment hits your account with the reliability of a Swiss watch. This is the difference between hoping your stock goes up and knowing you'll get paid regardless. Tech stocks can make you rich overnight, but they can also make you poor just as fast. Dividend aristocrats like Coca-Cola make you wealthy slowly but surely. Let's run some simulations to see how this strategy scales. If you bought just 10 shares for around $660, you'd earn about $20 per year in dividends. Not life-changing, but it's literally free money for doing nothing. Scale up to 100 shares. That's $6,600 invested, generating $204 annually. Still not retiring early, but you're covering a few months of your phone bill. Now, here's where it gets interesting. At 1,000 shares like I have, you're looking at over $2,000 per year. That's rent money in many cities. But imagine if you had 10,000 shares. That's over $20,000 in annual dividend income. The beautiful thing about dividend growth investing is that these payments typically increase every year. So your income grows, even if you never buy another share. Let's be real about the downsides because nothing is perfect. Coca-Cola stock is boring. Like watching paint dry boring. You won't get rich quick, and you definitely won't have any exciting stories to tell at parties. The stock moves slower than your grandmother in a grocery store, and you might miss out on those explosive tech stock gains that make headlines. Also, with inflation concerns, a 3% yield might not seem as attractive when savings accounts are paying 5%. The tax implications can be tricky too. Dividends are taxable income in most cases. But here's the flip side. Boring means predictable, and predictable means you can actually plan your financial future around this income. While your tech-obsessed friends are riding emotional roller coasters, you're building wealth like a machine. The compound effect of reinvesting dividends over decades is absolutely mind-blowing, and emotional stability has value that's hard to quantify. If this dividend strategy sounds interesting, start small and educate yourself. Don't just buy Coca-Cola because some random YouTuber told you to. Do your own research and understand what you're buying. Look into other dividend aristocrats like Johnson & Johnson, Procter & Gamble, or McDonald's. The key is building a diversified portfolio of companies that have proven they can pay and grow dividends through multiple economic cycles. Consider opening a tax-advantaged account like a Roth IRA where those dividends can grow tax-free. Most importantly, think long-term. Dividend investing is a marathon, not a sprint. Subscribe to our channel if you want more content about building wealth through boring but effective strategies. Leave a comment below telling us about your dividend investing journey or what stocks you're considering for your portfolio. Here's the thing about boring investments. They work precisely because they're boring. While everyone else is trying to time the market and find the next big thing, dividend investors are getting paid to wait. My Coca-Cola position might not make me rich overnight, but it's definitely making me richer every single quarter. Sometimes the best investment strategy is the one that lets you sleep peacefully at night while your money works for you. Remember, in a world full of financial chaos and market volatility, sometimes boring is absolutely brilliant. Thanks for watching, and I'll see you in the next video where we'll dive into my complete dividend portfolio breakdown.